All right. So for this first story, we wanted to break down the filings that AppHarvest just released on May 10th as part of their SEC filings. So to preface this talk, first off, all of what we're talking about is within these filings. So it's all public information. This is not speculation. And the next part of that is, we don't take joy in talking about some of the not so fun news around AppHarvest. We both want to see AppHarvest do well, but we do feel an obligation to provide transparency. That's what it means to go public as a company. You kind of expose the inner workings of your company to the world and to investors. And so we just feel it's important to shed some real light on what's going on at the company. So that being said, there's essentially 4 kind of high-level things that are pretty rough updates within these filings. So we're going to go through each of those, the first of which is loan defaults. Evan, kind of give us an understanding of what's going on with some of these loans that AppHarvest has taken on to build their facilities and the current state of those loans. Yeah.
So essentially to pay for working capital, but also capital expenditures, they've been taking out loans to cover that. And so they're now not paying back those loans. They're defaulting on them. And so there's ramifications involved with each of those loans, requirements to hold a certain amount of cash, payback periods, collateral. And so all of these things are now coming to roost, and AppHarvest is having to address those loan defaults. So that's tough. It basically means they don't have enough money to to hold up their obligations to their those providing them credit.
Yeah. So that was kind of the first thing to be pointed out in this filing. And unfortunately, it just kind of gets worse from there. So knowing that they're defaulting on some of their loans is kind of the main red flag, really. It just shows that, they're not in a great financial position. But to just kind of add insult to injury, they've had to deal with some material events, as they put it in the filings. And that is just events that they were not anticipating that is having a material impact on their bottom line. And so this one is just around, their crop yields being impacted by, pests. So, any farm has to deal with pests, getting into their crop. And then they've also had a Listeria outbreak. So just to read one of the segments from the actual report, what's going on here. The first is around this Listeria outbreak, which is a really big deal because it's caused them to have to basically halt production on their Berea operation. So in the report, they say in April 2023, in the course of conducting our routine food safety testing, we discovered during a pre-harvest inspection of the presence of Listeria monocytogenes, an organism which can cause serious health issues in a production area at AppHarvest Berea. We voluntarily suspended operations at AppHarvest Berea beginning April 17th, so it's almost a month ago. That's over a month ago now, and undertook and are continuing to undertake several mitigation efforts, including removal of the plants from AppHarvest Berea, a thorough cleaning and disinfection of the farm, thorough testing to validate the cleaning and sanitation process, and replacement of the plants. As a result of our proactive testing, effective protocols, and decisive actions, no implicated products were shipped, which is great. It's good that they didn't get any of that contaminated product out the door. But they say we expect these mitigation efforts to affect yields for the second quarter of 2023. So this is the Listeria part of it. They basically had to halt production on an entire facility, which is awful with all of this other stuff going on. So, it's no one's fault necessarily. That's just kind of an unfortunate event that they're having to deal with. And then they go on to talk about some of their pest problems that they're having that just kind of adds on to this rough news. So also in the report, they say, also during the fourth quarter of 2022, we observed pest-damaged strawberries and active pests. In response, we undertook several mitigation efforts, including the removal of plants, a shortening of the growing period of plants that were or may have been affected, and modifications to operational practices to eliminate or greatly reduce potential transmission vectors. These efforts adversely affected yields for the 21-22 growing season at AppHarvest Moorhead, so their flagship greenhouse, and the 2022-2023 growing season at our Somerset facility, including shorter than expected growing seasons. So, I guess this is one of those things that you deal with whenever you're, growing produce. It sucks that this is happening in a controlled environment setting here. You would hope that kind of stuff would be at least less common in one of these greenhouses, but nevertheless, they are dealing with it, and it's going to significantly increase their expenses and burn. They have to take those mitigation efforts. Those are not free. So disappointing to see that. Anything you want to add to that part of it?
Yeah, I mean, I would just say that, they probably rushed the ramp up of these facilities and getting them up and development, and probably cut corners, and, they got pests and, these, what is it? The
Listeria.
outbreak of, what do they call that? A
monocytogen.
Yeah, never heard of that.
Well,
but yeah, I would imagine that from an operations perspective, they overlooked some things here, because you would hope that, two things like that happening back to back at the exact same time is not normal.
Yeah, it's hard to tell. Just going off what we're seeing in the report, though, it's just really unfortunate. So the next part here, and I'll let you dive into this. They've received a Nasdaq delisting notice, which a lot of people were predicting just because their stock fell under $1. So kind of break down what a Nasdaq delisting notice is, what it means, what the implications of that are, and we'll talk through that part of it.
Yeah, so I mean, if a stock is publicly traded and it goes below $1 on the Nasdaq, then they get a warning that within a certain period of time, if it's not brought back above $1, then they have another period of time to get it above $1. And it's been, I don't know how much time at this point, but they have until October 16th to get it back above $1. So I don't know how they're going to do that with everything going on. So I would imagine that if they don't go bankrupt or get bought before then they'll get delisted. So, they're no longer be a public company, which, frankly, they don't deserve to be a public company. They should have never gone public.
Yeah.
So this is just another one of those things that, there's ramifications to not executing, and they're not executing. So this is, the public markets, taking control and delisting a company that, normal retail investors shouldn't have access to.
Yeah, agreed on all that. So yeah, again, that's October 16th is kind of the date to watch out for there, which is, as we continue talking through this, October is going to be a big month all around in terms of the ramifications of some of these things. And then kind of the final thing here, which is what I was just alluding to there, is also in the report, they say absent more funding, they expect to run out of operational capital in the third quarter. So word for word from the report, they say the company is exploring additional financing alternatives, including but not limited to an additional sale leaseback transaction. So to pause there, that is what they did with their Berea facility. A sale leaseback transaction is when they essentially sell off that facility and then lease it back from whoever bought it. In this case, Mastodardi. Is that correct?
Yeah.
I want to make sure I'm getting that right. They also go on to say sell leaseback, so third-party equity or debt financing or other sources such as strategic relationships or other transactions with third parties that may or may not include business combination transactions. So they're running out of cash. They got to figure out a way to get more cash in the door, or like I said, they're going to run out of operational cash by Q3. So, and one other kind of part to add to that, that is definitely not in their favor, that kind of goes back to the Nasdaq delisting notice. Apparently there is going to be a board vote to try and do a reverse split, a 10x or 20x reverse split, I believe is what I saw on that. So all of these things to say, when Q3 rolls around, it'll be interesting to see if they can find a way out of this. But they're certainly not in a great spot.
They would be out of business, I think, right now if they didn't raise that 46. That includes the $46 million from that share issuance that we talked about a couple months ago. So a few other stats here just to show kind of what ultimately is going on here. So they're sitting at about a $68 million valuation, which is down from at one point, I think it was around $3 billion valuation. So that is a ridiculous, decrease in value of the company. So another problem with this, and we've been saying this all along, is from the beginning, this just didn't look like a healthy business. I mean, the business projections, when you talk to professionals in the field of indoor agriculture, they didn't think they were possible. And so to show how they're executing against the original projections when they SPAC'd, this year they're projecting sales to be in the range, this is net sales, in the range of 40 to 50 million. When they SPAC'd, they told the public and retail investors that it would be about $145 million this year in revenue. So that is, not even close. They basically threw a dart at the wall and hoped it hit some target, and they were blindfolded when they shot that dart. And then the projected losses when they SPAC'd for 2023 were $5 million. They're projecting $67 to $76 million of losses. So, from the beginning, there was nothing really accurate about this business other than the fact that they said they're going to build some facilities, and they did that. But from a business perspective, there was arguably nothing ever here.
Yeah.
And so now we're starting to see that.
Yeah. And God, I do hate it for them. They went from kind of this visionary pitching the vision, we're executing, we're building these facilities during COVID, and they did a great job of getting those facilities up when they did. But you kind of get the sense that there is this culture of just throwing money at it. And I just say that from my own experience. The startup that I work for, our office is in the same building as AppHarvest offices, and it was almost a joke amongst our team for a little bit of how much office space they were buying in this space. Is just, there's no need for it. And so the amount of cash that they were burning on things like that just made you question, was this, how is this not foreseen at least a little bit more? Why not act a little bit more conservatively? I don't know. It just seems mismanaged in a lot of ways. So yeah, that's most of my thoughts around it. I know that you have kind of your thoughts around what's going to happen next.
Yeah, I would say they're probably going to get acquired if they don't go bankrupt first. So I would say Master Darty would probably acquire the real estate. So that's probably the most likely scenario other than bankruptcy. Those are probably the two options from this point forward.
Yeah, sucks. Really sucks. So again, that's just kind of a realist perspective on what's going on directly from the reports that are on their website. So, there's a lot of legal language in those reports, but you can kind of go in Command F and search for some of those keywords, and you can find a lot of that yourself if you'd like to verify.
Throw it in ChatGPT and ask for a summary.
Did you do that?
No, but I have on there documents in previously.
Yeah. So what Evan's talking about is if you go and just get the reports and copy and paste into ChatGPT, you can just ask ChatGPT to summarize stuff for you, which is a really effective way to read financial statements. So a little AI tip there to wrap things up. But yeah, other than that, not much more to add here other than, we would love to see them find a way out of this. We're still pulling for them. We have people that, friends that have worked for them in the past, friends that still work at that company. But unfortunately, the reality of it is that it's been poor execution, and it's just kind of where we're left right now.